There are a lot of things you should know when you're filing your tax return that can have a big impact on your tax return and maximize your refund or lower your taxes owed. One of the most basic and easiest to understand is your filing status selection. I'm Mark Steber, Chief Tax Information Officer at Jackson Hewitt. Today we're going to break down the different filing statuses, how your filing status impacts what credits and deductions you might qualify for, as well as your tax refund, and what special scenarios might change your filing status and more. So let's jump in. What are your tax filing status options? Well, basically there are 5 tax filing statuses: single, married filing jointly, married filing separate, qualified surviving spouse, and head of household. There's a small chance that you might qualify for more than one filing status if you're married, your spouse has died, and whether or not you have dependents. But it's best to go with the status that could offer the maximum deductions and credits you qualify for. How do you determine what IRS tax filing status you are? The easiest way to understand it is your filing status is determined by whatever your marital status is. And the most important thing to know is what your filing status is, or whatever you are on the last day of the year. For example, if you get married in July and you're still married on December 31st, your filing status for the entire year can be married filing jointly, even though you're single for the first half of the year. And this can mean bigger tax benefits. That goes for those getting a divorce too. If you divorce on the last day of the year, you're single for the whole year. And even if you're married or divorced at 11:59 p.m. on December 31st, near but not past midnight, that counts for the whole year. Now let's go into detail on the 5 tax filing statuses. Single filing status is for unmarried people. Simple as that. Not married, you're single. Pretty easy. Married filing jointly is the most common filing status for married couples. This status has the highest standard deduction and some of the most beneficial tax rate brackets. You file together and report combined income along with your combined deductions and combined qualifying credits on the same form. This way, the IRS holds both spouses accountable for all taxes due, including penalties and interest. And an important tax tip: if married filing jointly, you're each totally responsible for the total taxes, not just yours. So if you have concerns, see a tax expert about some other choices you might have, including married filing separately. So on to that. Married filing separately is another option for married people to file. Though filing jointly is best in most cases, there are some situations when filing separately works out better, meaning possible lower taxes or other benefits you might want. As we talked about before in the married filing joint status, most things are simply added together and all put together on a married filing joint tax return. But if you and your spouse have vastly different income levels or vastly different deductions individually, this might create a tax reduction opportunity to lower taxes by married filing separately. Too much to talk about here, but just know if you have big differences in your earnings and expenses situation, you should talk with a tax expert for sure about married filing separate. A few things to keep in mind about this status. It holds only the taxpayer on the return responsible for any taxes due and penalties and interest, not the spouse too, as with the married filing joint status. It's for people who don't want to file a joint return or whose spouse refuses to file a joint return, meaning you are not willing to file together. Most commonly for those going through a divorce or separation. It has the potentially high tax rate brackets, fewest allowed credits and deductions. For example, you cannot claim the Earned Income Tax Credit, American Opportunity Tax Credit, Lifetime Learning Credit, or the Child and Dependent Care Credit, and can make more of the income taxable in many circumstances, such as Social Security benefits. It also reduces your standard deduction amount to 0 if the other spouse is itemizing deductions. As I said, it is not for everyone, but it does have a place in the tax ecosystem, and if interested, talk with a tax pro, but do not elect a loan without knowing all the details. Qualifying surviving spouse is for people who have recently lost a spouse and are supporting a dependent child at home, who's either 19 years old or 24 if they're a full-time student or disabled. But if your partner passed away in the same tax year, you could still file as married filing jointly for that year. It's generally best for the next 2 consecutive years to choose the qualifying surviving spouse if you have a dependent child. Head of household is for unmarried people who provided at least half the cost to maintain a home for the year, while also providing more than half the support to at least one other person for more than 6 months of the year. The main benefit of this filing status are a higher standard deduction, as well as more taxable income falling into the lower tax brackets. 2 examples of who can claim themselves as head of household include single parents who have a child living at home and adults who provide support to their elderly parents or relative under qualifying circumstances. A few other things to know. Some single taxpayers can file as head of household. Sometimes no one provides more than half of the support of an individual. When this happens, a person who provides more than 10% of the support can claim the individual as a dependent by collective agreement. This filing status can be complex, so talk to a tax pro before making the final decision. Does your filing status impact what tax deductions and credits you can claim? Oh yes. One of the biggest things your filing status impacts is what your standard deduction amount is. The standard deduction is a flat amount that reduces the amount of income on which you're taxed. You cannot take the standard deduction if you are married but filing separate whose spouse itemizes, or you're an individual who files a tax return for a period of less than 12 months because of a change in your annual accounting period, or you're filing as an estate or a trust, a common trust fund, or a partnership, or if you are a non-resident alien or a dual status alien during the year. Furthermore, there are dozens of tax credits that have different requirements and the credit size amount as well. Many of them changed based on your filing status itself. For example, if you're eligible for the Earned Income Tax Credit, the amount you can get changes if you're single or married or head of household. If you try to claim a credit or deduction under the wrong filing status, it can cause a delay in the IRS processing your tax return, as well as a delay in your receiving your tax refund. What are the 2023 tax brackets and rates? Well, tax brackets and rates adjust each year for inflation. But at a high level, there are basically 7 federal income tax rates, meaning this is the percentage of your income you need to pay. Depending on your filing status, the tax rate brackets and rates are based off your total taxable income. And before I let you go, I want to rapid fire some of the most frequently asked questions about IRS tax filing statuses. Can you file head of household if you're married? In most cases, no. However, as with all things tax, as usual, there's an exception. You just have to meet the several requirements, like paying more than half of the household expenses and haven't lived together for at least 6 months. But generally, it's not a permitted option. Can you change your tax filing status at any time? Yes, as long as you meet the requirements for that unique filing status. Can you file married filing separately if you live together? Yes, you just need to meet the other requirements and decide if this is a better option for you and your spouse. How do you change your filing status? Well, changing your filing status generally requires a life change, like getting married or getting divorced. But on a tax return, if you made a mistake, you'll simply need to file an amended tax return to correct it. Will you pay a penalty for changing your filing status? Generally, no, not a penalty for changing status, but your tax refund amount could change. What do you do if you filed under the wrong filing status? File an amended return to correct the error. This could change your refund amount from that year, either by getting a bigger refund or having to pay back the IRS with money you weren't supposed to get. While it might seem as easy as checking a box on your filing status, it deserves a good thought and understanding of your personal and unique situation for filing your income tax return. It's definitely important that you get the credits and the deductions you have coming to you for your filing status. Schedule an appointment to talk with a Jackson Hewitt tax expert today at jacksonhewitt.com. And if you found this video helpful, please give it a thumbs up. Subscribe to our channel for more valuable information and hit that notification bell to stay updated on all things taxes.